Eric Muather, Muather.com, with world market analysis for the weekend of October 29th and October 30th, 2016. Let's take a look at markets here. And let's see how markets closed in Asia. Let's call it pretty much a down session for most of the markets, slightly down. We see that the Nikkei was up slightly. If we take a look at European markets at the close of Friday's session, we can call it mixed bag, but pretty much small changes, either positive or negative. And with about just under 2 hours before the close of Friday's session, let's take a look at the Americas here. We see that Brazil is slightly down, Canadian market slightly down, S&P 500 also slightly down. Let's take a look at those charts. And before we take a look at individual world markets, one thing I'll point out here is the takeaway from this video for the most part is we are seeing markets are trading in a range. Many markets are stuck in a range. And at some point we are going to have to resolve either with a move above the range to begin another uptick or another rally to the upside, or maybe this time we break down. Now I'll discuss why I think personally that eventually markets break down. I know it's too early to call. Actually, the best thing to do would be to wait for the market to resolve, and instead of trying to predict which way the market is going to break out or break down. But for the most part, the takeaway from this video, most markets are stuck in a range. Really tough to call what the market is going to do in the coming weeks, coming months. But let's take a look at those charts. Let's begin, as we always do, with the Australian market. Now remember, this market has been seemingly bearish over the last couple of months, and we've been watching this, and it continues to show the same look and feel. We got top side resistance line still playing a role in holding this market lower. For the week it was down about 2.5%, and we can see also there was a backtest line we've been watching, which has been a problem. So ever since this the break off the highs of 2015, the market came back and hit the same resistance line on the monthly RSI and stalled at the highs for 2016. So depending on whether in the new month of November, if it cracks below 50, expect a big down month. Now if we take a look at the Chinese market, we saw this past week there was an attempt to break out on the weekly chart above the recent 2016 weekly closing high. Now for now, that has not been successful. The level we've been watching here is for any movement as far as China is concerned above 3,108.10. So this past week there was an attempt to break out that did not really take it beyond that level. So that seems like it is struggling to hold above that. So until it can clear this well-defined 2016 weekly closing high, this market still has a lot to prove itself. Anything above this level would be bullish. Now if you take a look at the daily, you see that the daily is struggling to hold the recent highs. So if you take the highs and connect the highs on the daily RSI, you can see that as of Thursday and Friday, it hit that level and is pulling back. So there's a lot of work that needs to be done if this market is to see higher prices. It would have to break out above the resistance line on the daily RSI and also move above 3,108 on the weekly chart. Since we haven't seen any of those, I still maintain the view that net this is a market that still could be sideways, maybe even eventually rolling over to being down. Now unlike China, if you take a look at the Japanese market, it cleared the recent resistance levels here on a weekly closing basis and it's been moving higher the past 2 weeks. So the level we are watching there, which seems to have been breached to the upside, which is bullish short term, is the level at 16,956.76, which happens to be this recent weekly closing high. Of course, the market moved above that 2 weeks ago and continues to look good. Now, if you use price by itself, it might seem like this is where one needs to stay long, but I'll show you why I suspect around here it could still struggle to move higher. If you take a look now at a 5-year weekly as compared to the previous 2-year weekly, you see that it is coming back on the RSI to test the recent break. Now this break, just go and draw this from the break, this break here, going back to the highs of 2014. Draw a line from there. In fact, you can even take a look at this resistance here of the highs of 2015. Same line. So every time we hit this red line, we seem to stall. Let's test that. We hit this level here for the highs of late 2015, and now even with the price breakout short term, we are still coming back to test that red line. Until we move above the red line, I suspect around here we could stall. So that's one layer of resistance that could stall the market. Also, take the highs on the weekly chart going back 2013, connect the highs, and you can see that the market is coming back to test the top side of its weekly RSI line. Resistance on these two lines would suggest that the next meaningful direction for this market continues to be lower. If you take a look at the Indian market or the Nifty, we can see that right now we are stuck in a range between this recent weekly closing high, which happens to be at 8866.70, and this is at 8572.55. This recent weekly closing low. So if we break below that, then that will be short-term bearish. Now, of course, we are within this range. Tough to tell which way it is going to resolve. But let's not forget that there was a failed breakout when the stock tried to move above 2015's previous weekly closing high. So that was a negative at the time, and the market's lower since then. So there was a failed breakout attempt at this point here, and since then the market is low. So right now we are stuck in a range. Tough to tell which way the market wants to resolve for sure, and this confusion can actually be seen on the daily chart. Take a look at the daily chart, and what you see here is you got topside resistance over the last couple of weeks, clearly well defined topside resistance, and you got bottom side support. So we are definitely stuck in this wedge. At some point we will have to move out of this range. Tough to tell which way the market is going to decide to take. Of course, bulls would want to see a breakout above the wedge, and those who are bearish would like to see the market break below that to begin the next potential slide. Now, if we take a look at the long-term monthly view, this is where we see that chances are that this market has already given us a major sell signal. Why? Because there was a breakout attempt here that failed. When the market tried to move above the current all-time monthly closing high at 8844.60. So once that failed breakout was recorded, of course the market's been slightly lower. Now the problem with this breakout attempt is that it came with declining RSI strength, or higher or a lower high. That negative divergence eventually might set the stage for a major bear market move lower. So we have to watch this, because as long as this is the case with this negative divergence, the monthly charts don't look good. And I've been saying for many months, the problem is if you draw a line around where the current resistance level is, right here. So this resistance right now, we can see that some of the major drops in the Indian market have come every time we crack below this level here. We tend to have a huge reaction lower. We stalled here for the highs there. We broke below here for the highs there. Again, we broke below here with uniform action above and below the line for the highs there. We broke here for the highs there. So now this is creating a little bit of a visual problem, because as long as this is resistance, one can start speculating that over time it will not be a surprise if we go into some type of a major bear market drop. This is not the only market that looks bearish from a long-term perspective. Take a look here at the South African market. There was an attempt to make new highs here in early 2008, but take a look at what the RSI did. RSI failed to move above 61.8. which is the worst type of negative divergence. And since this attempt here, the market rolled over, went on a major bear market drop. We're seeing the same thing here. There was an attempt to stay at fresh monthly closing highs that failed, and at the same time you can see that the RSI was rejected when it tried to move above 61.8. so you consider this similarities there. Chances are in the coming months this could actually still be pointing down. In fact, we've seen a huge retracement since the highs over the last couple of months, going back 3-4 months or so. And again, just like the Indian market, we can see that there was a failed breakout attempt, and failed breakout attempts are notorious for taking markets lower. We failed here, an attempt to break out failed here, another weekly attempt failed, and of course this week failed. Since these attempted breakouts, the market has rolled over and continues to roll over. If we take a look at the daily chart for the South African market, we can see one characteristic of a market that wants to go down is uniform activity rejection. Every time it tries to move above the 50 level, uniform activity rejection here for the highs there, uniform activity rejection around RSI 50 for the highs recently there, and over the last week or so, uniform activity rejection during the highs for this past week. So that's a characteristic of a market that still has a lot of work to do if it is to see higher prices. Also, as a quick note, we can see that all these highs here, the high there and the high here and this high, came with the MACD showing uniform activity rejection at the 0 line. So all those highs correspond with this uniform activity rejection as it went above the 0 line and back below it with uniform action. Uniform activity rejection here, and recently uniform activity rejection as the MACD went above 0 and back below it. Again, this is a market that has a lot of work to do, otherwise the path of least resistance continues to be lower. If you take a look at the French market, we are clearly stuck in a price and RSI wedge formation. Tough to tell which way this market is going to resolve. That's a price wedge. Here is the RSI wedge. And again, until we resolve either above or below, it's anybody's guess which way this market wants to go. If we take a look at the German market on the weekly chart, we can see an attempt to break out here above the recent weekly closing high, and that level is at 10,713. So if it can stay above that, it might attract some bulls and push it higher. Now the one issue I do see here is that it is coming back in essence to test the recent RSI break level of the highs of 2015. So this break here in the RSI brought the market off the highs. We haven't been back to that level, so we draw a line from there, and you can see that this still continues to be resistance. It hit that line here and stalled. It had hit the line here and stalled here in late 2015. We tagged that line for the highs of summer 2015, and here we are back again to test this line. So until the market can move above this well-defined RSI resistance line, I would speculate that this also is going to fail. And especially if you take a look at the daily chart, which shows a slight improvement in price highs here, but the RSI failed to make a higher high. In fact, the RSI did not move above 61.8. Again, this is the worst type of negative divergence according to my own research. Let's take a look at the FTSE. And one thing here that I don't like, particularly is, just like the other markets we've seen, the Indian market, South African market, is there was an attempt to break out above 2015's weekly closing highs, but that attempt failed. As you can see, that failed. We did not close above that, so I have a problem with that. Also, we made an improvement in price highs in terms of the weekly time frame, but this came at the expense of the RSI making a lower high. Also, there was rejection at 69.1 on the weekly RSI. I think if you add all those together, this market is sideways over the last couple of weeks, but still potentially looking to go lower in my opinion. And we see the same type of negative divergence here. We had improvement in price highs, but the RSI failed on 2 occasions. So that negative divergence line was confirmed at the highs, and that's not a good setup, because it just shows that the market doesn't have that kind of strength to move higher. So yes, there's resistance every time it tries to move higher. But is it broken? No. You cannot say a market is broken when it's trading above an upward sloping 50-day moving average. So it might not have the strength, but for now has yet to break down. Now if we pull back and take a look at the big time scale monthly data going back to 1990, we can see that what is actually taking place here is an attempt to break out above the current all-time monthly closing high. And this breakout attempt on the monthly chart continues. So we can see that it needs to close above 6984.43 if this is to be considered a legitimate breakout. I think it stalls around here is what I think. And also take a look at what the RSI is doing right now. It's pretty much coming back to test the top side. If you go and draw a line going back to the RSI highs of 07, you can see that we're pretty much coming back to tag that line there. If this is confirmed resistance, especially as we go into the new month, then that would suggest that again we are looking at a market that could stall. Keep in mind, if it stalls around here, we can test this level by going backwards. So take that level there if it's confirmed as resistance and just draw a simple line, and you can see that that line gives us other major turn points in the stock. Breakdown here during this RSI break there corresponds with it moving below the red line, and of course we have the bear market movement lower of 2008, early 2009, and actually even here we see again uniform activity above the red line back below it, or we can even say a break of this wedge off the highs of early 2000, and we went into another bear market move. So here we can see that resistance here, as we've seen in other markets, if it remains, might be suggesting that we are looking at markets that might have a major plunge in the coming months. If we take a look at the Canadian market, we've recently seen this market move to fresh weekly highs over the last year or so. So we have an improvement in price highs, but take a look at what the RSI is doing. So that negative divergence, a little bit of a problem there, might suggest eventually it rolls over. The daily chart showing the same type of negative divergence. We had an improvement in price on a daily closing high, but the RSI made a lower high. That negative divergence could set the stage for a pullback. And keep in mind, if you take a look at the long-term picture, just as we've seen in other markets here, the problem is stalling around here. If the RSI stalls around here, that's not what you want to see. The biggest drops on this chart have come every time we had a major break, trend line break there on this, and the red line for the movement lower for the 2003 bear market. We got this trend line break here. You can actually even draw it there. Trend line break here, resistance there for the highs right there, uniform activity rejection here for the highs there, and recently we also broke down below the red line and below this wedge, so, or this trend line. So a break below those two lines was bearish. If we turn around here and confirm resistance on this RSI level, I would suggest that this might be, indicating a market that could eventually see lower prices. So the monthly charts, I don't think give a lot of confidence as to where the market wants to go. In fact, we can conclude here by taking a look at the EWZ, the ETF that tracks the Brazilian market, and it has had a nice run. There's no question about that. But even with this nice run in the month of October 2015, pretty much what's happening here is it's coming back to test the recent break level here. Now this break level in 2011 brought the market off the highs there, and we went into a major bear market tailspin. So we draw a line from there, and you can see that this has already been used before as resistance level for the market here during those highs, and now we are coming back in essence to test that red line. I think if this is confirmed as resistance as we go into the next couple of months, the indication here is that after a nice run off the lows of late last year and early this year, chances are that now, unless we clear this resistance line here, unless we clear this line, one can expect that the next swing trade is lower. Eric Muather with Muather.com. As always, good luck, peace, and blessings. ESC. Woo! Yeah! Woo!